James, how are you?
Hi, hi guys. Yeah, I'm very well. How are you?
Doing
Doing
good,
well,
man.
doing well.
Thanks for joining us today. We don't typically do a lot of base projects, but every time I
Okay.
flipped on to Twitter, I saw EDEL popping up, and
Yeah.
figured you guys have a strong community, and I would love to pick your brain and highlight what you guys are building and hear from the horse's mouth, if you will.
Yeah, sure. That sounds good.
Sweet, James. Do you want to start? And we'll get the EDEL Twitter and website pull up here in a second. But do you just want to start by giving us a background on yourself and
Yeah,
what
sure.
brought you to crypto and building EDEL?
Yeah, so I've been in crypto for a few years now, but I guess I started working in investment banking as a sell-side equity research analyst at Berenberg. I worked in the City of London. Did that for the first 3.5 years of my career, and then this was midway 2018. I guess kind of in the midst of the I guess two bear markets ago now, and yeah, I mean I think during my time at Berenberg, we were doing some blockchain research, and I'd already bought into already was an investor in Bitcoin and I think Ethereum at that time. Yeah, and probably a handful of others from the 2017 bubble, and was just totally convinced by it. I think at the time, if you remember, it was the wild west in crypto in those days with the ICO bubble. And so I figured it would be an opportunity to offer kind of institutional grade type services in crypto as an advisor. And actually, we weren't kind of too picky necessarily on, I guess, the services, because our vision was really at the time to build a kind of suite or an array of tools and services that would kind of mirror in a way what you would get in TradFi. And so I founded Saxon, which is effectively a market maker, venture like a prop fund, advisory, and also a validator on various networks. And I guess as we were kind of going through it, our vision was always very strongly, we had a strongly held conviction that security tokens were obviously the next going to be a really good use case for crypto. And we got very actively involved in Polymesh, which some of you may be aware used to be Polymath. They invented the security token standard, and this was about in 2020. And yeah, so we actually got quite involved with, I think we were the largest validator on the network apart from the foundation for a long period of time. But I think what happened is with Polymesh is it had, I can't speak ill of the project, it's a fantastic project and an excellent team, but I think they had so much functionality, and it was substrate based. And I think that kind of bear in mind, it presented some challenges, because honestly, if I just put you in the psyche of what the vast majority of TradFi workers think, it's for them, even they're only just getting their head around Bitcoin. You speak to them, I'm sure some of you have met people in TradFi, especially in Europe. I think this is more of a phenomenon, but for them, it's really difficult to grasp. And just getting them over Bitcoin is one thing, but then to take them to all the kind of functionality that is available on these various chains is another thing. And I think what we started to see with big institutions like Franklin Templeton, BlackRock, where they're building these kind of RWA type products, often quite gated, but these RWA products, they chose Ethereum, I think partly for interoperability, but also simplicity as well. And so we figured that we were obviously bullish on this space, and I think there's several key kind of pieces of infrastructure that are needed for any kind of market-based system, really. But in crypto, if you think of your utility tokens, what are the kind of key milestones or infrastructure that we've seen come out? The first one is obviously creating the token. The next one, I think, which is obviously what we're working on predominantly, is borrow lending, so Aave, Morpho, etc. And then after that, I think possibly perps is also incredibly important. I forgot to mention a DEX. You obviously need to be able to swap them, borrow them, lend them, concentrate capital, and then perps is effectively your derivatives market. Now, firstly, I'm a huge fan of the Ondo product. I think they've created, and Xlocks as well, I think they've done a really good job at solving a really difficult and delicate kind of problem and challenge. And so, I think when we've been speaking to the Ondo team and the Xbox team as well about the product, and we're very bullish. But I figured, what makes these things valuable is not just the fact that you can buy the token; it's also what you can do with it, and that includes swapping, borrowing, lending, etc. And I felt that we could do a better job at tailoring the experience for tokenized equities than someone trying to cater for both utility and tokenized equities. Our focus at the moment is to really build the top most dominant player for any kind of tokenized equities borrowing lending, but also offer those kind of super app like features, being swaps, and also maybe even an EDEL card where you can spend those assets as well. We have some other ideas in the pipelines of how we would like to grow things from there, but yeah, I'll leave it there.
Cool. So you have an institutional background. This is kind of your wheelhouse, bread and butter.
Yeah.
And my next question was going to be, what exactly is EDEL? But you covered that a lot there. And you can feel free to go more in depth with it. But maybe we'll start by just going over again those key offerings you have, right? Borrow and lending being one. You have a DEX, I think you mentioned. So maybe just give us a list here of what it is you guys offer.
Yeah. So the core product is borrow and lending, but I think it's not quite the same proposition as it might be for a utility token borrow lending like Aave, because these assets are, I think vast majority of people in crypto, I think not maybe the majority, but a very large number of people don't have a brokerage account, have never owned a stock. I don't know what it is with you guys. Do you guys own stocks, or have you got an account?
Yeah, I mean, I have some sort of background in that, but I think you're pretty spot on with the notion that most crypto people don't.
And I think on top of that, there's this idea that everybody who plays around in crypto would like to exit at the top, obviously. And in that kind of vision, which starts to get a bit blurry, they think they might be able to cash out and move it back to the bank account. And the truth is that I've seen it happen time and time again where people kind of round trip it. Perhaps they go into stable coins. And the truth is, I think when it really gets down to it, the actual transition from leaving crypto for the vast majority of crypto, retail users, leaving crypto, and bear in mind, most people get into crypto because of the core technological kind of benefits and things that are fantastic about it. The idea of going back to TradFi, some clunky system that's very slow, restricted, gated, etc., it acts as a massive barrier, to be honest. That being said, we now have for our platform to be able to grow and create a deep liquid market, it is going to put the emphasis is also on us to actually generate those potential users. Like we have an onboarding, duty here to be able to acquire those customers, because I think the majority of crypto investors do not hold tokenized equities. So with Ondo X stocks, especially, I'll start with Ondo because to be honest, I think their offering is very well documented. The selling point for them is that you're tapping into the New York Stock Exchange liquidity, which is obviously fantastic because the deepest liquidity you'll probably find, or Nasdaq, sorry, your deepest liquidity you'll find out there, and at the same time, because that is one of the key benefits of Ondo's assets. They don't want to try to recreate the wheel by adding, I suppose, like DEX liquidity. And so your methods and your avenues to acquire these tokenized assets are really via two channels. Like one is you get an Ondo account and you go through KYC, etc., or you use an aggregator, kind of like 1inch or CalSwap, where you have a solver, and those solvers will basically handle all the kind of complicated minting part for you, as if it was similar to USDC and stablecoins. And so at the moment, we've got an integration with CalSwap to be able to handle this onboarding. We also do have a verified account with Ondo as well, and we are able to do this ourselves. But to be honest, I think CalSwap, the CalSwap integration is I think it offers extra comfort, and I think that it's a great product. So the plan is really, we need to offer swaps and make onboarding easy because people don't own these assets currently. And then build the best, deepest, most liquid borrowing lending market from there.
Awesome. And this image I'm looking at here, it gives I think a good insight into the vision you guys are trying to achieve. Maybe give us an idea. We've seen just in the last month 75,000 active addresses, over $1 billion in monthly transfer volumes, and some statistics here on the screen. When you think about this market, and oftentimes on the show we have people that are either bringing private equity on chain, equities on chain, bringing funds on chain. We see this migration happening from traditional finance on chain a little bit. When you picture it, what is the size of this market? How fast do you think that migration happens? Just maybe give me the vision there.
That's a good question. So look, I think firstly on the size, in theory, I'd be surprised if all equities to a certain extent and the settlement is not actually tokenized. I guess the question is how open is that? And I guess if it is open, how quickly does it kind of permeate into what we know as crypto? So I guess in terms of speed, you put yourself. So firstly, I also think this is actually going to be a retail-driven phenomenon, as it has been with crypto in general. It takes a certain level of depth and liquidity and technological kind of robustness for TradFi to ever really consider this. If I was to go and speak to some of my former colleagues and say, guys, would you like to get your MetaMask and interact with our protocol? That's just going to ding, ding, ding. All the compliance alarm bells are going to ring off. So, and on top of that, they just, to a certain extent, they're too big. So you have to build up depth in order for this to start to gain more and more traction. I think it will happen quite quickly, though, to be honest, because I do think the product offerings are good, but I think you need to have that pull factor to bring people in and to make these assets useful. And I think that's where we come into play. It's kind of almost bring that kind of Robin Hood-esque experience to, I guess, like DeFi securities or DeFi equities. It's hard to say. We're very bullish, and we think we can grow this market to being very, in crypto terms, very, very large. But in actual terms of equities, you don't really need to be that big, really. I mean, there are trillions, just on the lending side of things, there are trillions on loan at any moment in time. That says that I think that puts you above Bitcoin, maybe even close to the total size of crypto as a whole. So and I would imagine a huge portion of that is in maybe top 20 security, top 20 equities. So yeah.
Got you. You mentioned this pool factor, right? And the reason you can pool someone into DeFi, we've experienced different strategies that make DeFi maybe more appetizing than normal traditional finance, like being able to borrow, lend, borrow against positions, earn yield and loop, and do certain DeFi mechanics. What for you is that pool factor when you talk about pool?
Well, I think there's like several. I think there's several things. I think partly I think if you ask like why many people in crypto don't really use a stockbroker and all the rest of it, I think it's partly friction. It's definitely part of it. It feels like there's a quite high learning curve as well. But the pull factor for me is, if I have, let's just say an equity, and I can get dividends off it. Well, if I can also lend that out, as lots of funds do, for example, a pension fund might lend out, then I'm also able to capture double yield. Basically, I can get the dividend yield and the lending yield, which is I guess somewhat unique, because these assets, I guess it's not totally dissimilar to having like a wrap staked ETH kind of thing, and then lending it out. It's somewhat similar, but you're I guess diversifying to some of the best companies in the world. So yeah, I think probably friction, quality. I think one thing we've struggled with in Web3 and crypto is very fragmented, kind of grassroots type industry, and to kind of as a result of that, or perhaps, you know, it takes time to figure things out when you're interacting with the blockchain. But we've kind of neglected, I think, sometimes like the quality of the user experience when it comes to the product. So for us, you know, our priority is step one, build a fantastic web app, but very soon the plan is to expand that into a mobile app and other easy onboarding experiences.
Awesome. Great conversation so far here, James. And I mean, what you guys are building is extremely massive. I mean, it seems like, you know, you guys are getting a lot of traction already. You already have 40,000 users signed up on the wait list. Can you talk about, you know, when do you foresee this kind of going live? You have 40 users on the wait list. Tell us a little bit more about that.
Yeah, firstly, we are blown away, to be honest, by the scale of the signups. In terms of, it's very exciting that there is this much interest and people kind of share the same enthusiasm that we do. In terms of like the product kind of roadmap or rollout, the plan is within the imminently, and I say imminently, I mean within the next, I think the developer team might be angry if I say this week, but maybe
Put the
next
pressure
week. On. Yeah. I'm trying to, but Thanksgiving, you know, like there's excuses they like to make. But yeah, I think next week.
Like spending time with their family on Thanksgiving.
Family, like, I know, what's that about? But yeah, so I think probably, let's say the end of next week, to be, in my mind, slightly conservative, is where we will see a test net rolled out. We're doing that, I guess, for multiple reasons. It will give people the opportunity to fully interact with the protocol. There's a points program as well, and I think I don't want to ruin too many of the surprises, but I think it's quite a novel and exciting and kind of addictive way to experience this. And yeah, so that should be the end of next week, and it'll be a kind of I guess nearly like there's extra. Obviously, it's a test net, so there's many extra things that we want to add in the pipeline, but I think it'll give people a really good, solid feeling of what we're about.
So you guys have testnet rolling out next week, potentially, possibly. Is this the first time this
should be next week?
Is this the first time like you're kind of talking about?
I think so. I mean, we had a we had a Discord. Was it earlier this week? Where we sort of said it would be, you know, soon. But yeah, I think this is probably the first time that I've actually probably put a date on it.
Wow. So alpha on stream for all the MCG viewers. One thing that I wanted to point out as well, I saw this on the Twitter page. I mean, obviously, this is a big endeavor, and people realize that. That's why you guys have had, you know, 40,000 signups so far. That's why a lot of people have been interested in this. I see you guys on the timeline all the time. Can you talk about the team that that is building this? You know, I know obviously you're the founder, but you know, talk about the rest of the team, because I see Uber, Binance, A16Z. I mean, tell us a little bit about that.
Yeah, I mean, we've got like quite a diverse array of skill sets. I mean, there's, you know, we've got several of us are sort of TradFi rooted, as it were. I mean, I have been in crypto now for 7 years or so, but even in that time, I was regulated by the FCA until I think the beginning of this year or beginning of this year. And so, yeah, I mean, we've got a good quality team of, I guess, DeFi experts, people who've worked, especially on the marketing side, and also, I mean, there's different age groups, right? So we've got guys who are really DeFi native, like Andres, who's, you know, one of the co-founders as well. You might have seen a video he posted, and then myself, which I guess is kind of like a hybrid. And then we've got some more experience when it comes to the marketing side, working for, you know, really top quality firms for much longer than we've been working for. And then we've got some really good guys specifically in the, you know, securities lending market. So they worked at JP Morgan, BlackRock, which I actually do think there was another video we posted today with one of our advisors as well. You guys should check that out. Give you a little taste of stuff. Is it at the top?
I think it's
yeah, Charles.
Was it this
Yeah,
one?
this one. So yeah, so
Gotcha.
it's at JP Morgan. Most of his career, I think, was at JP Morgan and Bank of America.
Wow.
So yeah, no, I mean it's really helpful because I think for us, like we do have a strong belief that this is not going to come. I think TradFi are going to do their own thing for a while, okay, and it will seep through. And I think it's kind of down to the crypto community to build, to basically aggregate collateral and capital to make this a viable and high quality product that TradFi will come into. But I guess like the key element for us is to try to be cognizant of how, as we start to mature, the direction of travel we build and the technological kind of decisions we make to make this not just suitable for retail, but also something that can be kind of plugged into from TradFi. And I do mean plugged into. I think if you take an example, I was an early investor in GMX, and obviously I think I thought to myself, this is probably the last time I'm going to see a perp dex. The game seemed kind of sewed up, as it were. And then Hyperliquid came along. We do some market making, and I speak to the market making team, and this is at Saxon, and they do really like working with Hyperliquid, primarily because the API and things is very similar to a centralized exchange, and that changes the dynamic quite a lot. It's stuff that we maybe take slightly for granted, but it makes a better product for retail as well, just by having that kind of plug-in kind of backdoor. That is how TradFi will interact with this. They will have systems and APIs and things that will enable them to do it in a kind of compliant manner. It's not really our decision on how, to make the decision on how they are compliant. It's just that they can do it more than anything else. We're focused on building the rails and a good product. But yeah.
How important is communication? I see your Twitter is, pretty active. You guys have updates coming out from the team, multiple tweets daily. How important is communication, especially in crypto, for what you're doing?
I think it's definitely very important. We tried to, obviously, we've newly launched, right? So, and I think because we did we're a DEX launch project, we didn't have huge VC funding. We chose specifically not to go down that road. And so, you don't build up, I guess, you haven't spent a bucket load on marketing beforehand. And so you need to be mega active and in and around the TGE as much as possible. And from this point forward, we will continue to do this for as long as we've got something interesting to say. But I think for people who are I think there is definitely kind of a fortunate shift I've noticed. The other issuers of these tokenized assets like Ondo and Xdocs and even Coinbase, I think, announced today, they're going to start having tokenized equity assets available, and that them really introducing their products quite aggressively makes it kind of good timing for us. And given that I think this is kind of a new product or new tech to people, it's kind of on us to ensure that we introduce ourselves and what we can do, and why it's an exciting time to be involved with EDEL.
It almost seems like this convergence between Web 2 and Web 3 is just number one, happening as we speak, but it's no one can stop it. You see Robinhood dipping their toes in, especially with private equity, like you said, Coinbase, and just everyone else really trying to get involved with this. And I don't know, it feels like it's imminent, really.
For sure. And for us, I guess there are many players involved in the tokenization aspect of this, and grateful for them because it's a huge amount of responsibility in tokenizing these assets. And I guess our role is to not pick a winner per se, but create just the best market for these assets. I imagine that some of them will have them on their own chain. I think Robinhood was talking about building its own chain. Some of them might choose Base. I'm assuming Coinbase. Ondo, I think, has got Ethereum at the moment, and then I think Binance soon too as well. So I guess our goal is just to try to facilitate the best market for all of these assets. We have some ideas on how we could improve that experience and abstract away the chain elements to this, because I'm sure you guys have dabbled in DeFi all the time, and switching between chains it can be a bit annoying sometimes, to be honest.
Well, I think that's why we see the FOMO app recently do really well as a trading platform, just because it makes it so easy to trade amongst all these different chains. And I know Chill and I go way back to the the Ethereum days when Ethereum was really, really hot, mainnet, I should say. And I remember we were both invested into a product that was all about, connecting these different chains and helping with liquidity fragmentation, which seems to be a big issue. And I hope that there's still some sort of interoperability that comes out soon enough where everything can be connected, because it is a problem.
Yeah, it is a problem. 100% it's a problem. And it's something that we've actually spent a lot of time discussing and thinking about internally. I guess more it's partly down to how, we're working with oracles and things. And so for a borrow and lending market, it presents some slight challenges because the liquidation process doesn't work the same as it might on Aave. This is somewhat asynchronous. There's a liquidator has to keep things on hand and inventory on hand to settle it. And so we are working in the background on either a really nice user experience that abstracts that away, maybe in some form of account abstraction. The thing we're conscious of, though, is ensuring that by making the borrowing and lending and the experience on the platform really, really nice and easy to use, we're conscious of the fact that we don't want to make it extra difficult for people to then buy and sell these assets by, not being on the right chain. So we're working closely with, various tech companies to be able to, and internally in the team to explore options. The most extreme kind of option is potentially even our own L1 or L2 to be able to aggregate this, I guess, similar to somewhat of Hyperliquid. But these are, I guess, things that we'll be working on, exploring as we get a better sense as to where the issuers themselves where they want their homes to be for these assets. Because this is my conjecture, but I'd imagine that they will, some are going to have their favorite.
Well, can we talk about the app experience a little bit? Obviously, it's something that's extremely important in any product like yours. What can we expect from the app when it does go live here in approximately 1 to 2 weeks?
Yeah, so I mean, you should expect to see a product that one is obviously nice and clean and easy to use. When it comes to onboarding, it should, we want this to be clearly tailored to stocks. I've spent I started buying and selling stocks around my 18th birthday. There's certain information that you want. There's certain things you would want to know and see before you actually even buy one of these assets. It's not quite like a utility token where it's a bit more sentiment driven. So extra data or ancillary data is a key thing. And on top of that, there are metrics that are, I guess, we're doubling up to a certain extent there as we're trying to tackle this market of borrow lending and securities being lent out. And at the same time, there are many people going, say, short on a stock. And so we want to be able to make this experience the best for users. And so having that data that's like premium data, stuff like short, just being able to see how much short interest there is, or quick check line on the financials, or when there's an earnings announcement, or what's the current news. And we want all of that to kind of be baked in. So you have this, probably, to be honest, in my mind, a better experience than what you're going to get on your brokerage account. I've had a few. So but at the same time, it needs to be really, really user friendly and easy to digest.
Got you. And James, I think if I remember this correctly, you said you were working in investment banking on the short side. When you look at the markets now, I don't want to get too far on a tangent here, but when you look at the markets today and equities are at all-time highs, tech especially, the S&P, Dow Jones, NASDAQ, are you looking short? I know not financial advice, but how are you feeling?
It's a tricky one. Honestly, I've been thinking about this with the AI stocks in particular. It's one rule I actually made to myself, this was years ago now, I think when I was working in the bank. Don't go short something that really, for a start, when you go short, your maximum upside really, unless your leverage is just 100%. But your maximum downside is infinity. So it's much easier finding a bull market somewhere. It's much easier to do that. So it's not my preference to ever really go short something that is kind of, but it can be emotionally charged. You know, no matter how high Bitcoin goes, as an example, I think you'd just be pretty absolutely mad to go short it. Also, I think, and this is going to be important, I think, for crypto as a whole, but also for equities. And that is, I think, the worst of the tightening cycle is over. This is a bit macro-y, but I think the worst of the tightening cycle is over. And that has a huge trickle-down effect for crypto. It's one of the main reasons, I believe, why we've kind of seen a decimation of VC-backed crypto funds. You know, if you think about the opportunity cost, I'm sure some of you, do you remember how there was this big trend of like treasury-backed tokens, yield-based? That's a byproduct of rates being high. You know, the opportunity cost of stuff, and it starts off with bonds and risk-free bonds, and they just keep going down. And so the required rate of return for higher risk plays just goes up astronomically. And I think as you start to lower that kind of cost of capital, we will see, I think, quite big uplifts in anything that's deemed to be somewhat obviously speculative or higher risk, but also has a quite high payoff. And so you're probably likely to see, I mean, these big tech companies are very invested in AI, and it's very hard to size that one fully. But I think there's no doubt that like both crypto and AI are very important. They're very important kind of technological pieces, like, I guess, innovations that are going to be here to stay. So yeah, I personally would never go short. I would try to find something that is going to be going, I guess, up.
I tend to agree with that advice. I mean, look, take Michael Burry, for example. I mean, one of the prominent short artists of our time. He hit the one short, and he's been chasing that ever since, and he just can't get it.
Yeah, you saw it. I saw he closed his fund down the other day. He said his valuation kind of methodology is just not in sync with the market. And I think that is kind of reflective of stuff that is very difficult to actually size.
Yeah. So I tend to agree with you on that. I don't want to get too sidetracked, but I just was interested in your opinion there. When we think about your platform, I got to ask, are you guys doing any lobbying in terms of anything there?
No, and I suppose like for us, like the priority is that we I guess remain decentralized. It's important. It's very important. It's important that we kind of do that in a way, because we're dealing with securities now. Like these things that, I mean, there are some, I don't want to say anything unless I get in trouble by a lawyer, but I think there's some great innovation that's occurred in actually enabling these tokenized assets to even come about. That being said, there's a very big responsibility for those issuers, and those issuers are the custodians, they're the brokers, they're the guys who make this kind of magic sort of happen in the background. And so, you know, we've got a team that's based all over the world, but I guess mostly in the US/Europe. And it's hard to know where exactly to like point your lobbying efforts. I think Europe, to be honest, is probably more likely to be a follower. Europe in general is far more conservative, and the UK is, I don't want to speak ill of my own government, but, you know, I think they could probably be a bit more oriented towards the free market, but that's what you get, you know. So I don't know how much any efforts would with the current state of, I think, the parties in charge across Europe, I don't know how much of a difference it's going to make. And in the US, I think things seem to be swimming along quite nicely.
Very nicely. Where is EDEL based? Is it based in the United States or based in a European country?
So I guess like where the team is based is in part, I guess the majority of the team is in Switzerland. I'm based in London. And in fact, a bunch of us are based in the UK. We've also got guys in New York as well. And we also have, unfortunately for him, a guy based in Australia, which makes his meetings the most ungodly hours for him to communicate. But yeah, I'd say mostly East Coast and Europe, Western Europe.
Okay, sweet. Chill, I know we had some questions on revenue here. We got 10 minutes till our next call, so we got to speed run a few of these, Chill, if you want to kind of start ripping through those.
Yeah, I guess talk to us a little bit about revenue model. Anything you've seen so far, metrics wise, that would be important to mention on a call like this one.
Yeah, sure. So revenue model for whom exactly here?
How does EDEL make money?
Yeah, how
how will we make money?
Mhm.
So I guess there's two pathways in which we can make money. The first one being we can, and this is not something that we've clearly defined at this point, but we can charge obviously a small percentage on, maybe yield that comes in, or the interest that's being paid. That's possible. The other one is I think the difference between what you see, the liquidation process is not the same as RVs. It does require an asynchronous kind of more market maker type approach where you're having to take on risk all the time to settle these loans. And at the moment, I think we would quite like to have a larger role in handling the liquidations, because I think it presents two parts here. One of the things we've seen with Hyperliquid was this buyback program, which has been very successful. And I think that if we're able to combine liquidations with also obviously covering some of our costs, but predominantly I think we would like to either return that capital, some of the margin, the profit, the revenue, as it were, from those liquidations, either back to token holders or in some form, in the form of a buyback, or maybe even some form of yield. So those are kind of two avenues. The next, I guess the final one, is additional kind of ancillary type services. We're working on a cool product at the moment that's still kind of taking shape and deciding a name on it, but it's, I guess, more community and I guess services. It's hard for me to describe, and I'll save that one for the next time I come on the podcast.
There's no set number you have yet
for what exact revenue forecast?
No. Buybacks and like percentage wise.
No, I think when we do it's going to be a function. So one, I would never want to promise a set figure. I think it's going to have to be it will be like a percentage of, it will be a percentage, and that will be clearly defined. But it's hard for us to know at this stage. There's a few parameters that will also come into play. As an example, if we do like a liquidation premium, we're going to start, at the beginning, it's going to have to start off relatively high, but we don't anticipate that staying like that. We would like to bring that down as the market gets, I guess, more adopted and all the rest of it. So it's quite hard for us to give a fixed figure for a buyback, but I guess that is the intentions. And it will be a percentage of something, percentage of revenue or margin, as it were.
Got it. And as far as the token is concerned, we did see it the other day. I noticed that you guys got tagged by Bubblemaps, and we saw that. I know that there are probably some viewers out there that might be thinking a little bit about this, but we noticed that you also had a response to this tweet as well. And I can share my screen if you don't have that. If that one,
no, I've seen it.
But yeah, so I just want to kind of clear that air as well. Maybe not many have seen the comment, so definitely feel free to share a little bit of feedback on this tweet by Bubblemaps.
Yeah, sure. So I guess like our view on this, we did a DEX launch, and I think just to start things off, I don't think anything we've done is out of the norm from a DEX launch. I think that the token did very well in a market that was, to be honest, a bit of a bloodbath. And I think that obviously attracts attention and it makes a good story and a good headline. What I will say though is, I think the Bubblemaps, it's a cool chart, but honestly, I have failed to understand how that chart is generated. I honestly don't. It doesn't make any sense to me, those dots. We spent a long time working on the launch plan, and to me, it seems like they spent a lot of time looking through the early transactions, and actually all they needed to do was go to the docs, and it would have just told them exactly what they were kind of looking at, which is that we were very clear at the beginning, 60% of the supply will be placed into a vesting contract. These are the allocations. the tweet they put out basically seemed to imply that we got 30%. Obviously corrected him and said it's 60%, and that's that basically. Yeah, in terms of the actual how we actually did it, I think that what they seemed to be kind of a little bit confused by was the fact that we had tax addresses, which are tax recipients, and we had a taxon token for the first hour. And the reason why we had to go down this road, to be honest, was that we had been told point blank by a bunch of people that they had set up their sniper bot, and that makes it very difficult if you're running a real project where you have allocations that are set and you need to be able to get them. And so we had to, I guess like the novel thing that we did that I've not seen before was we had like effectively a deployer contract that batched these transactions in one. And that included being taxed. So what that meant is that we deployed the token, we created the liquidity pool, and the first buy was there, so we could acquire tokens. And that also included that first buy was also taxed. And so when he's looking through some of these transactions, I think to a large extent, that's actually just us reconsolidating the tokens that are then now in a vesting contract, which is, you can see it on the holders thing, and it is what is exactly in this chart here.
Got it. It's an important conversation to have because I see this got 100,000 views and your response only got 10 or less than 10, right? So it's important to
I mean the chart's pretty chart and it's eye-catching, isn't it? And it's a good
Yes.
story. It's I've seen these Bubblemaps things before, and I think there's just been relatively quiet. There's a project does really well, a good scandal. Like, I'm not surprised this gets a lot of attention, but honestly, I think it's almost like doing a massive detective work piece when actually it was in plain sight via the docs. I think the mechanisms of how, I think one of the accusations was you didn't, I guess, describe, I think it was actually you sniped, but you didn't tell people you're going to snipe. As I said before, like at the beginning, it wasn't really our intention to have this aggressively fast snipe, but when you're told point blank that people are going to snipe, and indeed someone did snipe very early on, they managed to get a large chunk, and I think within the first hour made maybe $500,000 to $1 million and dumped on us. And we thought, to be honest, we thought that could have been the end of it, which would have been devastating. And the fact that we had the tax there, I think, basically shielded us to a certain extent from it. Now, this wouldn't have affected anybody unless you were a sniper yourself, unless you're a programmatic sniper. Aerodrome, it was for 1 hour, and Aerodrome doesn't let you do those kind of swaps if the slippage is too high. And we're aware of that. It's just that we were told point blank people are going to do it. So, I mean, I honestly don't see how this is any different from what we've seen in the past. For people who do plain vanilla DEX launch, and I do mean DEX as opposed to a fair launch or a VC launch, because with a fair launch on, say, Pump Fun, it is a different proposition. It's definitely very, it's an excellent innovation, but it's more geared towards a meme where you don't have big product and costs and allocations that you need to get those builders to buy into, where a VC launch is obviously a completely different ballgame. So we're trying to and I think there's something that needs to, I think as a cult, what kind of was obvious to me was that this is kind of emotionally, I felt it was very emotionally charged, to be honest. If you look through the post, and two, the reply they did to me, it was very emotionally charged, and it actually speaks, I think, something we need to talk about in crypto a little bit about what do we deem to be an acceptable way to launch a token, because I've seen many projects who do the VC funding route, and they get listed on a SEX like Binance or wherever. I'm not pointing names, but when they launch, we all know what happens. They all basically dump 90%. And initially, I think it was obviously VCs trying to exit because their cost is so much lower, and that kind of, I think, also spurred things like Pump Fun, where the community could get in first. And so we need to, I guess, agree on like a standard of what what is acceptable, how many tokens are the builders allowed to actually buy for their team straight off the bat, and I suppose not demonize the first 2 seconds of a launch.
Yeah,
honestly,
the irony behind it too, and I don't have an opinion because I just haven't dug into this enough. I've heard what you've told me, and I've seen some tweets. But the irony of this whole thing is, if you guys had the docs out stating this before it happened, like Bubblemaps went through all this work to put this post out there, and then like if you had it there, it's just kind of ironic. But
and it's been there from the beginning, months ago. I know. I thought it was ironic too.
Either way,
I didn't reply to their reply just because there are multiple things in their comments that don't stack up to me at all, and it was, I mean, this is very, to be honest, I thought the post is quite unprofessional for an analytics firm. I do like what they do, but I don't think that was their best work, to be honest. I think it was, and it's hard to disprove something that is actually just so emotional in nature. And I thought, if we give this more attention than I felt in particular it deserved, you're just exacerbating the kind of FUD. And we are pre-product, and I do understand that in that pre-product phase, there's a bit of a vacuum, and so we're doing our best to come out with something pretty rock star, and hopefully something that works for crypto people and kind of captures the imagination.
Right on, James. We got to jump on that. I think the next step is dropping a killer product and a killer app, and I guess proving yourself, and then maybe all this Bubblemaps stuff gets dispelled. But we appreciate you coming on, James, and hopefully we can talk soon. Maybe once this app releases, we'll get you back to test it live demo.
Yeah, awesome. That sounds great. Cool.
All right, brother.
Sounds good, James. Appreciate your time.